And what I want to do is kind of look back at these internals, right, and see whether or not there were any things that were kind of pointing the way to tell us that this early move was unsustainable. And you have to understand is that one of the reasons why the markets retrace initial moves like this so strongly is because the majority of the players are not looking at these market internals. They have no idea. They're just looking at price action. All they're looking at 9:30 in the morning is this. And more importantly, all they're looking at is this, if you can imagine. Look, right? Think about this. This is what they call the hard right edge. So when the market opens, all they see is this, right? As we all do. I don't see what's past that either at 9:30 in the morning. So all they see is this. And what are they thinking? Bullish engulfment, perhaps, right? Look, all these smaller candles here are inside the body of this 15-minute. I don't have volume on this chart, but I'm not even going to bother. But what if I did, I would imagine that it's probably big volume here on the futures. Great, whatever. Okay, obviously, because the market was down firmly the day before, as it's been down almost every day. And whenever there's a gap up, you have a lot of people covering, right? That's natural. But what was happening under the hood, so to speak, internally as this huge gap was occurring, right? That's what I think is important. Let's move this back, okay? Was the advanced decline line sustaining itself past the first 15 minutes, or were the advancers versus decliners already moving lower? They were already moving lower. In order for a move of that type to sustain itself, okay, it needs more stocks on the NYSE advancing rather than declining in order for it to happen. Now, on this second bar here, you could easily say, well, it's just a pullback. Let's see how it goes. But when I see already that on the third 15-minute period, the relationship between advancers and decliners has almost come down to zero. It's only plus 400. Okay? Immediately I'm thinking that all the people, excuse me, that piled in on the first 15 minutes, they're also they're quite disappointed at this point, right? And it's a little bit beyond the scope of this seminar to talk about pivot points, but the first resistance point, I believe, correct me if I'm wrong, those of you that follow pivot points, which I think work quite well, floor trader pivots, etc., was at like 701 or 702. And we didn't get that high on the futures, but we came pretty close. So right off the bat, when I see a market that advances really strongly off the first 15 minutes and is moving to the first reversal area, and reversal pivot point rather, the first resistance point, R1, right? And it's coming up there hard and fast, and it comes just a few points shy of it and starts to die, I immediately start looking at these charts here and see, okay, what's the relationship under the hood as the market is doing this and having that big body first candle right up, right? Okay, so the breadth in this case was decent. I have to admit, I don't have much to say about the breadth. It was okay. However, in the second bar, the breadth already made a doji. And although it's holding pretty positive here, it wasn't really as positive as it could be. I would have expected a much greater expansion. And the way you figure out how big these expansions are, and again, I apologize because I don't really have the charts 100% set up like this because I use another package for this, but it certainly can be done with just these charts, is you can look at this relationship between U-vol minus D-vol, right? And you can just kind of divide the two. And if the U-vol is much, much greater than the D-vol, right, the amount of volume flowing into the up volume rather than down volume, if it's much greater than that ratio between the two, if you just divided the two numbers, and you can just punch them into toss, and there's ways that you can feed it into an Excel or whatever. There's a lot of different tricks for this, but that relationship needs to be greater than greater than 2 to 1, and preferably if the market is really strong, it should be far stronger than 2 to 1. Okay, on a really bullish day, the relationship between the up volume and down volume could be as high as 6 or 7 or even 10 to 1. 10 to 1 is relatively rare, but you can see like 4 to 1, 5 to 1, 6 to 1. When the market's really pumping, that's the type of move you don't want to go against. So again, you just punch in $UVOL in toss charts and then $DVOL. You can have them on your quotes page, and you can kind of just eyeball it and quickly see, well, what would it be if I divided, 800 million shares on the up volume over 600 million shares on the down volume? Well, right off the bat, you know that's only 1.5, right? Not even. It's less than 1.5, right? 9 over 6 would be 1.5. So 8 over 6 is a little bit less, right? So it's really not even 2 to 1. Okay, so you don't want to, so basically how can you use this? Well, I don't want to be as scared if the market's moving into some short vertical position or whatnot, right? If I have a butterfly that has some area exposed up in that area, I don't want to panic too much because I want to gauge the strength of the move knowing what's going on here, you know? And that's really, really important to note because just as a kind of a side note, I want to tell you that everything that Rob talked about in his section, I can attest that it is 100% true because I have traded that strategy myself, and I will tell you from experience that it's very effective, okay? But I will also tell you from experience, as I alluded to earlier, that you don't know what it's like until the market is moving a little bit against you. Everything's cool and everything's hunky-dory when the market's far away from the flies, and then you're moving the flies in, and when there's no exposure on either side and you're not heavily margined out, right, which I'm sure Rob went into in his presentation. You have to be careful of that you always want to watch margin, right? But the hard part is keeping your cool when you're moving into those areas where you're exposed. And that's all I'm saying is that with these market internals, you want to be able to use this internal stuff to kind of get a grip on how strong is the move that's moving into an area where I'm exposed. Is it more than likely going to continue because it has the momentum behind it, or is it likely to peter out? Okay? So in this case, for instance, in the example that we're looking at here, where we're just looking at the first 15-minute period in the ESs, right? And again, this is kind of weird because I got there you go, 9:30, right? There's the big bar right there, right? Where we're seeing the first 15-minute bar. Let me switch to here. And again, toss kind of, well, anyway, we want to be looking, I apologize, we want to be looking at these three things here to see how strong the move is. So again, just to tie it in, we're just talking about these first 15 minutes. We have breadth that's relatively weak. I told you it was not all that strong this morning. Also, these absolute numbers here where we're only at about, say, 150 million shares more on the up volume than on the down could be much, much stronger, right? I already said that the AD line shot up to levels that it was probably unsustainable off the first 15 minutes and then started to fade immediately, right? And now we get to the ticks. And what was happening on the tick side? Here's your zero line. Okay, so everybody just look at the zero line. This is really the most telling part, or I should say it's the easiest part for you to understand. The ticks are, I still maintain that the ticks are only the prince and the breadth is the king and the advanced decline line is the queen, but the prince is the easiest to read. If the gap was going to move up into the first 15 minutes and sustain itself and keep going, okay, look at the zero line on the ticks. Why are none of the 15-minute bars on the ticks closing over zero? Why is none of this moving up into the plus 1,000 area and staying there? Why were there no plus 1,000 ticks? Here, I'm sorry, this is it. I apologize. Here's the 6th, right? Here's the 1,000 level, right? Okay.